topics and opinions expressed in the following show are solely those of the host and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good morning, Florida. Welcome to another Ask the Expert show where we bring you the top experts in the field of legal, health, financial, and home improvement. What a great day to start off Monday morning, first Monday in April. And that means Provise Management Group. Timing could not have been better, because we know people out there are just, many of them are freaking out what's going on, but thank God we've got Ray Farrar with us, and he's going to explain everything to us. Good morning, Ray.
Good morning, Steve. And I don't know, explain everything. That's a tall order, but
hey, we trust you.
We're certainly lots to talk about this morning.
Well, I asked you right before the show, is your phone's ringing off the hook? And you started to explain to me, and we had to go on the air. So we'll
Steve, I'm here. I don't know what's happening.
Can you hear me?
I'm back with you,
Ray?
Yes, sir.
Okay, can you hear me okay?
Yep, I can.
Okay.
I can hear you. Can you hear me?
So,
all right.
Yes, I can hear you fine. So right before we went on the air, I asked Ray, I said, I'll bet your phone is ringing off the hook. And just when he was going to reply to me, it was time to go on the air. So and we're going to get to Provise, because we get so many new people tuning in every month. What's going on, Ray?
Well, Steve, in answer to your question, are we getting any phone calls? The answer is yes, but are we getting an overwhelming number of phone calls? The answer is no. Through last week, at the end of last week, we were looking at an S&P 500 that was down about 14% for the year, and down about 17%, almost 18% since its all-time high at the end of January. And most of the portfolios that we were managing at that point were down anywhere from 6 to 8%. They were not down that 14% or even that 17%. And that's because the clients were in a well-diversified portfolio. So when you tell folks, all the news that you're hearing out there and they're panicking, perhaps, put in perspective, if you have a portfolio that is well diversified, you're not experiencing what the S&P 500 is.
Right.
And the market was overvalued. Everyone understood that, knew that going into the year, that it was ahead of itself. And particularly that was true of technology stocks, and even more true of the Magnificent Seven, all of which have had substantial reduction in their values. Most of them greater than the 17% since the decline. For those who have a well-diversified portfolio, maintain a long-term approach to the market. This noise is unfortunate. It's somewhat, no, I shouldn't say somewhat. It is self-inflicted because of the tariffs, and you need to just ride through this. I know there's some other questions that you've got that we'll talk more about what to do in the market, et cetera, and where we think the market is headed. Although we're off to an awfully bad start again this morning, but not as bad as it was earlier.
Ray, please correct me if I'm wrong. Uh, my Sophia is, of course, freaking out because she has a lot of money invested in stock. And I keep telling her, just be patient. The market will correct itself and it'll come back. Am I giving her bad advice?
No, I don't. I don't think so at all. Today, the market is down. Last I looked, which was about 40 minutes ago, down about 800 points on the Dow and about 150 on the S&P 500. That's going to put us almost into bear territory where the market declines by 20%. It's at a time when often it is said that the money leaves the weak hands and goes to the strong hands. And by that, it's meant that people panic, get out, obviously because of the fear that it's going to go lower. And it may go lower, Steve. I can't say that that's not going to happen. But you've heard me say before that the stock market is like a man walking up a flight of stairs with a yo-yo. And right now, and we all watch the yo-yo, we lose sight that the man is, going up a flight of stairs. And right now the yo-yo is down and it could go down further, but the man's still on the stairs and is still, moving up. Just saw a post show up is what's meant by the Magnificent Seven. Those are the large cap tech stocks, the household names that we all know. Alphabet, which is Google, Apple stock, Microsoft, Nvidia, Facebook or Meta, as it's now called, and a couple of others. So those are what are referred to as the Magnificent Seven, and they got that nickname because during 23 and 24, they rose at a dramatic pace, well ahead of what the market was doing itself. If you take a company like Nvidia, which makes chips, and these chips that are used for artificial intelligence, it is an excellent company, and it is growing at a very fast pace. But when you have even a company growing at a very fast pace, and its price to earnings ratio, that means what is its price divided by its earnings. A normal stock market is going to, when I say normal, a balanced, we'll call it a balanced stock market, is going to have a price to earnings ratio of about 17, maybe 18 if interest rates are a little bit lower. And growth stocks might be somewhere in the 25 range in that kind of a normal environment. But Nvidia at one point was well up into the 60 times earnings, which means when you're paying for that stock, you're expecting for those earnings to really be growing dramatically, and nothing grows to the sky forever. So that's how they all ended up getting the name the Magnificent Seven. They just got way ahead of themselves. All of those companies are excellent companies. All of those companies are making money, but overpaying for those companies, which you were doing before the market corrected itself, and it's still high, Steve. I mean, it's
right.
It's not cheap. They're cheaper than they were 4 weeks ago. But they're not cheap.
We got our first text in, Ray. Ray, I love your show. I love the way you explain everything. Hypothetical. What if these tariffs do what President Trump says they're going to do. Is that really going to help our economy?
So some of our younger audience will not remember a show that was on in the 50s and 60s called the $64,000 question. That was
Yes.
that was a quiz show, which the top prize that very few people won was $64,000. And back in the late 50s and early 60s, that was truly a meaningful amount of money. And so in response to the question, it is the $64,000 question. Everybody's going to have to wait and see. I had a client call last week and said, well, what's going to happen? And my response was, I have no clue what's going to happen in the short run. I've been in this business for 54 years now. I've never seen an economic time like this where we're shooting ourselves in the foot. I make no comment regarding politics. I make comments regarding economics. I've been a strong anti-tariff person. That I don't see anything positive coming from most tariffs in the longer run. But President Trump and his advisors, both in the Commerce Department and in the Treasury yesterday on the TV shows, they all doubled down on the tariffs and said, you're going to love it in another couple of years. And maybe we will, but let me also say that the political cost to the president, if things don't turn around relatively quickly, will be rather dramatic. And the scary part is over the weekend, the president himself kind of doubled down on the tariff, saying this is not a short-term strategy. Now, that in and of itself being fair, he can't say, well, it's a short-term strategy, because then everybody would just sit back and wait. So he's got to say he's playing the long game. But what we think will make sense is for someone, when I say someone, some country somewhere, maybe even a company somewhere, will capitulate and, quote, make a deal with the president and his administration. And then he will remove the tariffs from that company or that country, declare victory and say, now, if anybody else wants to come and talk to us, we can do the same thing for you that we've just done here. All we're looking for is fair trade. And that's kind of, I think that's the most optimistic viewpoint at this point. There was an announcement this morning that Volkswagen is offloading cars. I think it was in New York or in New Jersey, one of the two. And they said they're just going to keep them there at the shipyard because they're hoping that somehow, some way, the tariffs will disappear. So we'll have to wait and see. At this point, I'll just go back to what I talked about before. We've had these downs before. We have always recovered from them. It does take time, but those who are patient and those who don't panic by selling at this point, they will find themselves in a better position at some time in the future. And of course, we always, for those that are retired, we always encourage them to keep a good hoard of cash or bonds so that they can weather through these kinds of things, because bear markets have a tendency to last about 8 months, and then the recovery starts. And don't see any reason that wouldn't be the case now if we were to end up having a bear market across all of the indexes. The NASDAQ, the tech-heavy NASDAQ, is already in bear market territory. So hang in there, and we'll have to see how it's going to play out. And Steve, again, I talk about my cracked, foggy crystal ball. Well, I've dropped it a couple more times this weekend, and it is even more cracked and more foggy than it normally is.
Well, I wanted to save this for the show. my show was with iHeart many, many years, and I've got a lot of great relationships with iHeart. And a friend of mine called me on Friday with iHeart, and iHeart doesn't share their numbers with anybody. Since I'm not revealing any names, he said, something's going on with one of your shows. And I said, which one? Because we've got 50 shows. He said, your Provise show. I just want to tell you that people have been coming into the library at iHeart and choosing your show. And he wouldn't give me numbers, so it's really kind of a tease, but he's never done that before. So people really do have a concern. That's what we're so glad we have iHeart and Spotify, that people can go back and listen to your shows. But it must have been some pretty high numbers for him to call me on that. Tell people, we're talking Provise, and we've been doing this for almost 3 years now. Tell people about Provise.
Provise is a financial planning and investment management firm based in Clearwater, Florida, with another office in Tampa, Florida. We're taking care of about 1,100 clients, managing at the end of last year about $2 billion. Obviously, it's less than that today. And our emphasis, Steve, is on financial planning, not investment management. We see investment management as a subset of financial planning. If you have a plan, can you be successful without a plan? Yes, of course you can. But when you have a plan, when you have a financial plan, the odds of your success increase dramatically. I often draw the analogy to a lawyer in court. Can they go in and just try a case? Yeah, but it's usually better if they plan the case. They'll have better odds of success. The same is true, with a doctor, an electrician, an architect, and building a house. And you have a plan, you usually end up with a better result. And we think the same thing is true with financials. We have clients in over 30 states and work with them by Zoom. And so we're available to serve anybody within the United States, and take advantage of our complimentary 1-hour consultation, either in our Clearwater or Tampa office or by Zoom, to get to know us and to learn a little bit more about us. And more importantly, that we're going to learn about you. Or if you would like to kind of take a look at us, you can always go to provise.com, provise.com, and go to our website and then reach out to us and take advantage of that 1-hour consultation.
We've touched on this, but again, I want people to understand, what do investors at this point with the market, is it better to buy, sell, or just hold? And I think you're saying just hold, aren't you?
So the answer is always it depends on where you were. First of all, if you are invested, and I've said this earlier, if you are invested, I see no reason for you to go out and start selling at these lower prices, and maybe even lower than when you bought certain things. If you so holding makes a great deal of sense for those that are fully invested. I would tell you that I can't tell you that this is the time to buy, the time, that it's the best time to buy in forever. It's not, but it is a good time to consider being very careful with how you invest your money. And there are a lot of good names that have gotten swept up in this debacle that we've been in now for the last 4 or 5 weeks, and especially last week. And so carefully select individual companies or ETFs in certain sectors that you feel good about. I mean, oil is down to $60 a barrel. well down from the $80 a barrel that it was just a few months ago. Some are saying it could go as low as $40 or $45 a barrel.
Mm.
But at some point, as the worldwide economy is no longer doom or gloom, you're going to see oil back up again. So, I mean, that's an interesting play. Same thing is true with the banks that are down pretty good. And, our preference as value investors, Steve, is to look for those companies that are growing, steady, and pay a nice dividend, something in the 2% range or higher. Be careful of anything paying over 5%, because if you're getting a bigger dividend than that, there's a reason, and it means there's a lot more risk in that company. Steve, I know we don't have much time left, so let me just tell everybody once again, if they would like to reach out to us, they can send an email to us at info at provise.com, or give us a call at 1-800-633-3049. That's 1-800-633-3049. Don't forget, we offer a 1-hour complimentary consultation in either our Clearwater or Tampa office or by Zoom, and be delighted to chat with any of the listeners that seem to be paying attention to the things we've been talking about.
And also, Ray, your show, we do a live show. We'll have another one 2 weeks from today at 9 o'clock. If you want to go into iHeart or Spotify, it's listed under Ask the Experts, Tampa Money Management. And apparently people are finding that. Real quickly, we got a couple minutes left, Ray. I hope we can do this in a couple minutes. The Senate just passed a tax proposal over the weekend. When will you think this final bill be done, and what's going to be in it?
So I'm referring to where we are today, TNT in a jar. Taxes and tariffs. That's what everybody's talking about. The Senate did pass a bill. They were able to do it under reconciliation so that they didn't need 60 votes. There actually were two Republicans that voted against the bill. So it narrowly passed. I think it was 51-49. So we're still a long way away.
Yes.
The House has a different view of what should be done than what the Senate does. But they've got to figure out what they want to do first, and then the two houses have to come together and parse it out from there. So I would tell you that I think we would be very lucky to have a new tax bill before Memorial Day. So I wouldn't look for something on a tax bill until sometime in the early summer at the earliest.
Ray, we're so lucky to have you on this show. Tell people one more time how they can reach you.
Give us a call, 1-800-633-3049, 1-800-633-3049. Go to Provise, PROVISE.com, or send me an email at info@provise.com. A lot of folks have been doing that, and these are the questions that we try to answer on each of the shows.
Ray, again, will be back with us in 2 weeks on Monday, 2 weeks from today at 9 a.m. Eastern Standard Time. Ray, have a wonderful week. God bless you.
You as well. Take care, Steve. And don't forget, tax day is coming up.
Yes, that's right. Hey, we're going to go to a short break. We'll be right back.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.